the four-digit mark now. Taher Badshah is with us. He's Chief Investment Officer at Invesco Mutual Fund. Taher, good to have you with us here. Thank you for your time. I'm sure you would have seen the Godrej Consumer mid-quarter update, Taher. Would you take that as a sign, as a signal for what the broader sort of consumer / FMCG as a space has done in Q3, October to December? You think it's very company specific and you would go that far?
No, I would think that probably it's a combination of both. It's a reflection of the situation that we still have in the system, and we're still not fully out of the woods. And there is the other layer, which is basically the more structural layer, which is of regional competition, regional brands, and a few other things. So I think it's both these are at play at this stage. There is the cyclical factor, which is still not showing as much of strength and promise. And probably will take some more time to come through. And the other one is, like as I said, the more structural part, which is that some of the larger organized players are probably at the receiving end as far as competition is concerned. That's what it appears to be appears to us at this stage.
Taher, hi. Good to have you on the show. Just to expand on that point, on this whole debate around urban consumption slowing down and discretionary consumption still picking up. In your portfolios, when it comes to consumer, what are you keeping and what are you avoiding?
So we have kind of, been largely revolving and centering ourselves around the consumer discretionary space. Up until now, that has been where a larger part of the weight has been concentrated. We've virtually been absent as far as the FMCG portion of the market is concerned. And within the consumer discretionary space as well, we've probably been pretty specific and choosy about what we are probably try to reflect in our portfolios. So where the execution engine is strong and the growth momentum obviously is a lot more convincing. That is where we have probably stayed put. We have looked at certain parts, value parts of the market, which could be in probably FMCG retail. Or consumer retail rather, but that too is still at a very baby step kind of a level that we have probably approached as far as our portfolio is concerned. So that's pretty much how our configuration as far as the consumer portion of the portfolio is concerned.
All right. Hi, Taher. Good morning. First of all, congratulations. I'm looking at your Invesco India Focus Fund. If I'm not mistaken, I think it's given returns of 45 to 50% in the last 1 year. Wow. That's looking quite good. So congratulations to you, and good to see you are making a lot of money for your investors. But what about 2025? It appears to be far more challenging, and we've had a good run of late. Money making is going to be rather difficult. Which is your top theme you're betting on for 2025?
Yeah, it's not going to be easy. I mean, we are cognizant of that. We also have obviously, in our own minds, leave alone our investors and partners, we have moderated our return expectations as we get into 2025. Pockets are somewhat narrower compared to what of opportunities compared to what we were probably seeing in the last 2 odd years. But at the same time, it is also not a situation where we find it very difficult to ideate. I've said this a number of times in the past as well, that we do come across parts of the market which do turn into some relative value. So we've seen correction along the way in the last couple of months, as you know, and certain pockets have corrected pretty well. Some stocks are even down 25-30% or even more from their peaks. And they are, giving us some ability to think through in terms of their valuations. Maybe some of the public sector units have also corrected. Some of the defense stocks, for example, have also come off quite significantly. So I think we continue to be on a watch. We try to keep to a good balance between the portfolio from a perspective of growth as well as value, and it might probably this 2025 might call for a little more rotation compared to what it has been in the past. But at this stage of the market cycle, we believe that it is best to kind of diversify portfolios as much as possible. So even in you mentioned the Focus 20, and even in that portfolio, despite the fact that we are only we can do not more than 20 stocks, we're maintaining adequate diversity. Whether it be with regard to sector exposure, growth versus value exposure, or whether it be, even sector exposure for that matter, and thematic exposure too has been, as well as market cap diversity in terms of large cap, mid cap, small cap. So I think we are trying to that's going to be the formula as far as generating returns in 2025 is concerned. But the key mantra, which is
Right.
basically about bottom-up stock picking, that is evergreen, and that will probably continue in every kind of market cycle. You'll have to find winners, and we'll continue to probably try and attempt that with the help of our investment process.
Okay, all right, Taher, we thank you for joining in and filling us in with all of those details.
very much.
Wishing you a good day, and we look forward to chatting up with you either towards the end of this year or in the